What if you could literally hijack someone else's 2% mortgage rate without ever stepping foot inside a bank or running your credit score? This almost unbelievable strategy is known as subject to real estate investing, and it is the ultimate cheat code in today's Aziz. High interest rate market? Instead of applying for a brand new, expensive loan, you simply purchase the property subject to the existing mortgage that the seller already has in place. The legal deed to the house transfers entirely into your name, but the excess original mortgage remains safely locked under the seller's credit profile. All you have to do is take over their monthly payments, which allows you to acquire massive cash-flowing assets with very little money out of pocket. This is a massive win for motivated sellers who are facing foreclosure or a sudden job relocation because you are instantly solving their immediate financial crisis. While this strategy is completely legal, you must be aware of the duancil clause, which gives the lender the right to call the loan due if they discover the transfer. Let's break down the exact legal contracts you need to use to protect yourself and securely close your very first subject to property deal.